Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Hey, Kevin. Hey, Tom. Happy Monday.
Yes, happy Monday to you too. Yum Brands had a pretty good run, recently, but it's pulled back pretty significantly, Landon. It seems like this is have or have-nots in the restaurant business, whether it's fast casual, fast food. It seems like Yum Brands always has that problem where one of their divisions is doing well, usually Taco Bell, and like Pizza Hut and some of the others are lagging.
Yeah, that's right. I mean, and I think the story as of late has been Taco Bell leading the way, right? They had plus 9% same-store sales last quarter. Pizza Hut was -2%, and I think Yum overall was, in between there somewhere. So, and Taco Bell obviously is the one that's leading. I think analysts are expecting around plus 10% revenue this quarter. And yeah, I mean, I think it's possible. The problem that we see is that our data is actually showing Taco Bell as maybe showing some weakness. And I think if investors are kind of going all in on Taco Bell, then there's a risk of a little bit of a disappointment here. So you can see here we've got KFC at plus 5%, Taco Bell at -16%. I don't know why Pizza Hut's not on this chart. They should be at -2% on this chart, but just to give you an idea. We're seeing a little bit of weakness here. And, to put a little color into this is talking about, basically digital, not kiosk digital, but apps, delivery platforms, direct to the website, that kind of thing. And so it's a bellwether. It's not a direct measurement. I'm not saying that Taco Bell revenue is going to come in at -16% year over year. That would be catastrophic. I don't think that's the case, but the fact that it's negative and it's that far negative compared to what KFC is gives me a little bit of a pause. Now, it is interesting that their sales are moving to digital. If you include kiosks, it's 55%. So they're really phasing out, going up to a human and placing an order. So that's on its way out. It's all on the websites, apps, delivery services, or in store with the screen. What we're seeing right now is a little bit of weakness, but all of the talking points from the last quarter are strong. I mean, they've introduced this $1, $2, $3 menu, which is getting some buzz and bringing some new customers in. Their Lux Crave box is bringing new customers in. They're doing well there. I just feel like I'm just a little concerned at the numbers because they have had a nice run this year. Yes, they're down from 163 to 147 or so, but still it's been a pretty good run overall. And I think that the bar is going to be a bit high for the Taco Bell side of things. The other stores are decent, but Taco Bell has me worried.
Landon, this is by definition an asset-light model where they're big franchises, right? And we all know it's led by Taco Bell. That's the growth engine here. And actually, what I read, KFC International is one of their growth engines. But I want to talk about, Pizza Hut has always been a drag, right? Every quarter we talk about Yum. Every quarter we talk about how Pizza Hut struggles. Wing Street, what they injected into Pizza Hut to try to bring some protein, try to bring something extra. Is that doing any? Is it helping at all? Is it doing enough business to make a difference at Pizza Hut? Because we all know the other three. They've been around since all of us were children. But Wing Street's kind of new when they added that to Pizza Hut. Has it made any difference?
We've got them flat on a year-over-year basis. I don't think it's making a huge difference. It's a nice variety, but I think if you're trying to upgrade Pizza Hut, you've got to get people interested in the core product, and for whatever reason they've lost that. Now, I don't know about you guys, but I've seen all over my social media all the pictures from the 80s and 90s, like bring those stores back with the red tops and the red cups and and the buffet and everything. I think if they did that, they might get some buzz. But, just overall, I think they're struggling a little bit. But, KFC, like you talked about, international is unbelievable. I mean, Yum has a total of 10,000 units in China, and it sounds like a huge number. It's about a sixth of their total units worldwide. But they have room to get up to about 30,000 before they've saturated that market. Right now they're hitting about 1/3 of the addressable market. Most of those are KFCs, and they still can triple from there. So I think that's probably, I would hesitate as an investor to focus solely on Taco Bell. I think you got to really focus on China, see how that expansion's going, and see, because it's a, you have multiple angles here. And yes, lately everybody's been focused on Taco Bell because they're the ones that delivered the largest same-store sales growth at 9%. And the others are struggling a little bit, but I think that with KFC, they could really expand into China. So overall, I think if that's the story, then I'm a little bit more neutral. If it's all about Taco Bell, then I'm a little bit more bearish.
Yeah, Landon, I mentioned the stock's kind of consolidating right now, and you look at like what Chipotle reported, and the stock dumped after their report. I don't know if that's kind of their story at this point, but then you start looking at Taco Bell and some of the other ones that might drag down others, and then you start looking at the other ones in this space, the Brinkers and Darden restaurants at this point. What kind of score do you guys have on this one going into results? Because it seems like it's kind of twisting up here for a move.
Yeah, and you can kind of see the spread here where everyone sort of lays out. Yum is sitting at negative 9% overall, and again, that's with that's weighting everything. And Taco Bell's pulling it down pretty heavily. You can see though, I mean, with the different numbers that we've got, and given what Chipotle did, they're at the top of the list here. It does have me a little bit worried. I don't think that's going to be the Chipotle story. I don't think is going to translate exactly to the Yum story because it's just so different. Mm-hmm. I mean, the Yum is just a very different company, even though it's basically fast food for both of them, or fast casual if you want to call it that. It's just so different with the international exposure and the multiple brands. I think you really got to focus in on what it is about Yum that's going to drive these reports. Is it Taco Bell? Is it KFC in China? So we're sitting at negative 11 for the score for Yum, which, as you guys know, is kind of within that range of neutral. If we have to lean, we're leaning bearish, but it's fairly close. I do like, obviously, that the stock has pulled back from those highs. It's kind of consolidating here. You're right. I think it's kind of primed for one way or the other. And if I had to pick, I'd pick down. But again, that's based on, I think, expectations being a little too high for Taco Bell, the darling of all of them, and everyone's got high expectations. I think that there's a chance they could miss those expectations this quarter. But there's also a chance that China talk and KFC talk just completely says, you know what, maybe Taco Bell's not crushing it like they were. They're still doing okay, but man, let me tell you about China and let me tell you about KFC. That could send the stock higher too. So it's going to be interesting to see how all of the different angles play out. You've also got CEO who's going to retire, next year, I think, early next year, so 2026. So, it could be, you got to have that transition plan set up, and there's going to be a lot of discussion about AI probably, even though you wouldn't think that normally. They've partnered with NVIDIA, they've got efficiencies increasing, they've got their marketing campaigns driven by AI to get increases going there. So it's going to be a really interesting earnings call to see where the focus is from the messaging from the company, and then where do investors focus on? What do they hear? So again, we're negative 11, slightly bearish lean, but also fairly neutral on this one.
All right, great stuff. Great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder of LikeFolio. Kevin, I mean, think about this. Just about 3-4 months ago,